This is February 16th, 2011 Forex blog, and one of the first things we do each day when you first sit down at your computer to start the day's trading is see which currencies are strong and weak. Normally, most of us buy and sell dollar and yen pairs, and both of these currencies have a daily, weekly, monthly trend that are down. The yen's weaker than the dollar, and you can see a lot of real-time weakness in the dollar last night. And so basically, the dollar's weak. Last night you want to find one of the currencies that's stronger. We had quite a bit of strength coming up to midnight in the euro, but the daily, weekly, monthly trends down. In the pound, not so much, but the longer term trend had shifted up, so that was a good thing. Earlier in the night, so you might have before midnight and coming into today been looking for pound dollar buys. It's above the hourly right here. You can see NR breakout last night went up. You're in here at this breakout around 46, went up almost 20 pips. So definitely could have made anywhere from 5 to 15 pips on that trade. It pulled back, didn't really go back in. Anytime these narrow range patterns, oftentimes the breakouts either explode up or they kind of hover there, pull back. As long as it doesn't pull back underneath the low of that NR pattern, and preferably not underneath the high level, which is right here, which you can see it pretty much found support there. You have this nice little pullback trade right here. Daily, weekly, monthly trends up. You get in it again, and it kind of goes up and goes sideways. You might have exited half your trade here and then trailed your rest. We have the previous week's high and a monthly pivot level here, and it was also up a significant amount yesterday. So you might have really considered getting out of your trade somewhere up in here. And also notice on the way up it didn't have off the charts intensity. Usually when you have plus or minus extreme momentum like this, the trends continue. I really wish I had shorted this little counter trend move up earlier today. It was such a perfect trade because of this explosive weakness which came later in the day. Also another extremely good trade on this. Anytime you see a false breakout, here's a previous day's high, or it could be the weekly or monthly high. It breaks out, comes back down, tries to go up again. Notice this move up right here actually has negative weakness, which means the pound is going up against the dollar, but against most other pairs, the pound's weak and the dollar's strong. Very high probability counter trend scalping trade right there that you look to get out at the hourly moving average. An hourly moving average usually is where your counter trend trade will go to, and it's pretty close here. It was about a 20 pip move. You might not have sold here, but once it came down to the hourly again and didn't get a bounce and broke underneath this weekly R1, great place to go short. You might have got stopped out at break even and then had to get back in it, but just exploded down. Trend intensity is extremely weak, and you can see this little pullback trade here, excellent. And usually if you draw the fibs, especially the bigger the move the better. These fib targets, very high probability place to buy. Now I actually got in this trade and scaled in. I started getting in around 25 because there was a 20-day moving average right there. And anytime it's underneath the lower containment band by 30, 40, 50 pips, usually you get a nice reversal. As you can see, finally did happen. I got in, my average price was around 6,011 or 12 after I scaled in. I got in a very tiny position at first because I wasn't sure if it was going to work. I was planning on adding to it if the market took off. It never did. It went lower, so I added bigger lots down here to yank my average price down. I don't recommend anyone doing that that's not an experienced trader and hasn't done it a few times with some decent profits that you're risking giving back in the future the time it doesn't work. So do it very carefully. Anytime you go against a trend of this magnitude, it's definitely risky. When it works, it tends to give you pretty decent pip sizes. So going back to the currency meter, you can see at 3 o'clock the pound all of a sudden just became extremely weak, and the dollar wasn't strong at the time. The strongest one at 3 was, and we don't really have any currencies that are super strong on a daily, weekly, monthly trend. The Swiss had a lot of strength coming into today, and the daily trend shifted up. So you might have even considered selling the pound Swiss. Coming into today, it's underneath the hourly. This breakdown right here went from 80 down to 40. This 40 pip drop. Then you have a counter trend move right here, and it's pretty choppy. Anytime you see a choppy pair like that, you want to be pretty careful. Usually currencies that are trending, and the first time they come back and touch the hourly, it's a pretty decent place to go short. Just like yesterday with a big move up, came down and hit the hourly, good place to buy. It went up 50 or 60 pips. And when you see currencies not bounce on the hourly, like the pound and the euro today, this one came down to the hourly and didn't get much of a bounce. I had left the room, but I had suggested to people that when this breaks down right here, you want to go short. That was a pretty decent move. Fell about 15 pips. There wasn't an incredible amount of intensity there, but you can see the weekly trend's down. I primarily focus on the middle weekly trend. And if you miss that trade, you got another opportunity to get short right there and draw your fibs for profit targets. You're risking 5-10 pips to have a good chance of making 20-25. And if it shoots through the first one, usually the market stalls at the second one. And if it shoots through that, the first time, anytime it goes past the 1.618, the first time it kind of stalls, and you can see the previous day's low right here. It's at the lower containment band. Very likely to find a reversal there. And our trend reversal triangle usually finds the end of moves. Not always. Sometimes, like you can see here, is a little bit early. The market went up a little bit more, pulled back. And almost all the time, if you see a trend reversal triangle, the next fib level up is almost always the end of the move. 80, in my experience, 80-90%. And the triangle, if the longer term trend, in this case the monthly's up, much more likely to find the low down there. You saw the same exact thing happen in the pound dollar. Found the hourly, wasn't able to get a bounce. Once it broke down, very high probability trade, and you really could have gotten into that trade about 30 or 40 minutes before the explosive move down. And what adds to the odds of hourly moving average breakdowns is anytime you have a false breakout. Breakouts over the previous day's high, week's high, or month's high tends to suck traders into the there's a lot of breakout traders out there, and they got sucked into their trade, and they were losing money on their trade. And especially a lot of people use stops right outside of major support resistance. The hourly moving average seems to be very strong support when the trend's up. Notice the support yesterday, the first time today, then it broke. It didn't really get any bounce, didn't go back over the previous day's high. Very high probability trade. Let's see if we have any other ones in this. This was mainly due to that explosive dollar weakness that came on board. You can see how many times this one hit the hourly and reversed. Yesterday, when it came up to that level and you didn't get a move down, which normally happens, is a pretty big sign that the trend's likely to continue. Some markets are just pretty choppy. Here's one where it went up way too much the previous day. The market failed to go above the previous day's high right here. Came down, did not find support. You also have a weekly pivot level there, which should have added to the support there. It should have tried to at least go up 5 to 15 pips, and didn't. And this is also another beautiful, very low risk counter trend trade. Now, keep in mind the daily, weekly, monthly trends up. So the next support area is where I would anticipate the maximum profit. And that's right here at 64. So you're risking 10-15 pips to make 50 plus pips. And if it shoots through a support area like this, wait for the next one, which is down here, previous week's high, still above the previous week's high, which is still very bullish. That's why you see such extreme longer term strength here. And great place to get out of your trade. And I wouldn't have bought there, but the second time it hit and didn't want to go lower with 1/3 the weakness of before, pretty decent place to get in. Now this one really took quite a while to move up a very meager 25 pips, but still odds wise pretty high probability trade. A lot of these pairs are pretty choppy on the daily chart, not making higher highs or lower lows. This trade here kind of found support at the hourly. Once it broke, acted as resistance. Again, the longer term trend's up, so if you see any kind of double bottom when the longer term trend's up, and it proves to you it's not going lower, or there's not a whole lot of momentum on the downside, not a bad place to get in. CAD yen just kind of went sideways. The longer term trend's up, so when it breaks out of this narrow range pattern, you might have got in here. It didn't really go up that much. Notice the double top right here. Double tops frequently when you have less momentum at the second peak, or it's half the momentum of before. Usually it signifies the end of the move, and it becomes a pretty decent high probability counter trend move. I prefer to short double tops when the weekly and monthly trend are down though. And then if you see that, you can trade bigger lot sizes. If you're going against the longer term trend, don't get super aggressive. And usually the hourly moving average is a good profit target. So you're really risking about 8 to 12 pips to make a pretty high probability 20 pips on that trade.